Hey everyone, welcome to episode 1 of the Project 10X Weekly Roundup, where we bring you the most exciting crypto, finance, and tech articles to hit the media in the last week. If you enjoy today's videos, hit the like and subscribe button and let us know in the comments below what coins, topics, or content you would like us to discuss in next week's video. Thank you to those people that wrote in and said they wanted to see a larger version of me up on the screen. I've got it up for you now. So if there's anything else that you think we should improve, please let us know. So to kick things off, we've got Ninepoint lists $180 million Bitcoin trust fund on Canadian exchange. I feel like we've been seeing these every few days recently. So for those that don't know, Ninepoint Partners is the Canadian equivalent of Grayscale Trust. So it's based in Toronto and it's one of the country's largest alternative investment funds with around $7 billion in assets. These funds make investments into the digital currency easier for non-tech savvy investors as they do not have to bother with wallets and private keys. That's actually a really good point. Because the trust model that they use, it provides an easy means for institutions, some of which have bylaws that restrict them from buying crypto directly to gain exposure to the asset class. And the other thing is, the reason why I bring this up is that they have 7 billion in assets. What that tells me, I don't know if it tells you, let me know in the comments below, but it tells me that they know how to manage money. So if they're buying Bitcoin, maybe we should be buying Bitcoin. I know I am. Are you? Moving on, we've got lending service BlockFi files to launch Bitcoin Trust. So another trust fund being created. David Olson, which is BlockFi's VP for Europe and Asia, explained that the industry could very well see more institutions rush into digital assets this year. So as I mentioned, there's a whole bunch of the trusts being currently made now. And the reason is there's no ETFs currently available in or approved in the US. So you've got companies setting up trust structures until an ETF gets approved. Grayscale Investments, you've got Backed, Bitwise Asset Management, you've got Galaxy Digital. They're all providing investment products for investors. BlockFi also announced a partnership with Visa last month to develop a new credit card with Bitcoin rewards. Per a Bloomberg report, the credit card will reward purchases with Bitcoin instead of conventional options like cashback and airline miles. I absolutely love that idea. That's such a good idea. Well done to BlockFi and Visa for coming up with that, because who wouldn't rather get Bitcoin than airline miles? What are you going to get, 20,000 airline miles? Give me 0.01 Bitcoin, please. Moving on. And following on from the previous article, Visa may add cryptocurrencies to its payment network, says the CEO. So the Visa CEO, who's Al Kelly, says our strategy here is to work with wallets and exchanges to enable users to purchase these currencies using their Visa credentials or to cash out onto our Visa credential to make a fiat purchase at any of the 70 million. Just to put that into perspective, there's 25 million people in Australia. 70 million merchants where Visa is accepted globally. That is huge news. So not only will you be able to buy cryptocurrencies using your Visa credit card or Visa card, you will be able to purchase things with your cryptocurrencies, like your groceries, like when you go to the chemist, like when you're buying clothing, at any one of their 70 million merchants. So that is like, that's huge. Not only that, if they've got 70 million merchants, how many customers do they have? So what is the reach of A, BlockFi, and B, Visa? It's absolutely humongous. Next up, we've got a tweet from Dan Held. Now, I know this isn't news, but I thought it was important enough to add, and I love the tweet. Nothing to worry about, folks. Meanwhile, he's got a picture of the Fed balance sheet to hit 42% of GDP. Just to put that into perspective, the GFC was at about 15% of GDP, and during World War II, it was at about 13% GDP, the balance sheet, that is. So this means that the Fed is printing money like never before. So what happens when the Fed prints money like this? Well, let's take a look at what happened to the stock market following the GFC and the World War II to get an idea what happens. And to do that, I'm going to use the S&P 500 index. For those that don't know what the S&P 500 index is, it's a stock market index that measures the stock performance of 500 large companies on the stock exchange in the US. So 2007, 2008, we had the global financial crisis, had a crash in the equities markets, followed by 12 years of growth in the equities markets. That's massive. Let's see what happened in that World War II era. So 1944, and then we've got, again, huge growth in the equities markets. So I don't know what will happen in the short term, whether markets will crash or when they will crash, but I think this is a clear indicator that in the medium to long term, as long as central banks continue to print money, those of us investing in equities, commodities, and Bitcoin are sitting pretty. And the reason why I include Bitcoin, I know there's some of you going, hold on a second, why Bitcoin? It's because if you can recall, Bitcoin was created in the midst of the 2008 global financial crisis. And Bitcoin was created as a response to the perceived instability of those fractional reserve banking sectors. So the GFC is the reason that Bitcoin was created. Now, to get a little bit of reassurance, we've got the Fed chairman, Mr. Powell, saying, what's he saying? Okay, the article reads, stock valuations are looking stretched, and for some observers, bubble alarm bells are starting to sound. By a variety of measures, including price to expected earnings and price to the past decade's inflation-adjusted earnings, equities have never been so expensive outside of the dot-com bubble years. I agree. But what I found really funny was that the Fed chairman, Jerome Powell, said on Wednesday that across the asset market, banking and other financial areas, the central bank looks at the vulnerabilities overall as moderate. Moderate? Can we just go back here? What's been going on here to the equities market? Moderate. Look at this. Look at this. It's pretty much vertical. And let's have a look at the last year. Okay, 2020, coronavirus around that March area, crash and boom, all-time highs. Moderate, interesting. So one reason that the Fed isn't fazed by stock valuation is that it is among those arguing that in the current low interest rate environment, stock prices are dangerously excessive. Okay, the reason why they believe that stock prices aren't dangerously excessive is because their valuation measures, one of the inputs that they use is a 10-year treasury yield, and that treasury yield is super low right now. But that's beside the point. If the central bank says that stock prices aren't dangerously excessive, they're dangerously excessive. Moving on, US Federal Reserve again, looking to hire a manager to research stablecoins and central bank digital currencies. So the Fed chair, Jerome Powell, has said that the central bank needs better regulatory answers for global stablecoins. Agreed, Mr. Jerome Powell. Now, some of you might not agree with this. However, this tells me that the Federal Reserve is taking crypto seriously because they're hiring someone to manage that area. Not only that, they're taking regulation very seriously. And I think regulation is a fantastic thing to hit the crypto industry. And the reason is it gives financial institutions the green light to invest, even more so than they've currently got, because it brings maturity, stability, fungibility to virtual assets, and it raises the appeal to institutional investors. So these investors who may start to look at these investments or this asset class as a legitimate long-term investment instead of these speculative short-term bets that they may be doing currently. I think it also shakes off this tainted stereotype that we so often hear being used in the media and by politicians who portray Bitcoin as this money laundering and terrorism funding mechanism. It's not the case. And if someone wants to launder money, there are better ways to do it than on a public blockchain for everyone to see. but I think it will shake that stereotype. Moving on, after GME, Gamestop, Dogecoin and Bitcoin, Chinese traders are betting what will pump next. Rallies in GameStop shares as well as Doge and Bitcoin are piquing the betting interest of traders in China as much as they are in the United States. The article goes on to say, some say that while retail traders are jumping into certain stocks or cryptocurrencies, it may be more about taking advantage of an opportunity rather than a shift in ideology. So I get it. If something is going to pump, it's going to pump. We all want to get in early and get out while we're ahead. However, I think there's better opportunities than these Wall Street bets essentially. And the reason, ladies and gentlemen, is that with such speculative bets, it doesn't come down to being the first one there. It comes down to not being the last one there. Because if you're the last one there and you're left holding the bag, well, let's have a look at what happens. But before we do, let's move on to this Dogecoin article. Dogecoin plunges after rally, sparking outcry on Reddit. So someone's been left holding that bag, and I'll give you an example with GameStop. So GameStop shares were previously trading, before that huge uptick, they were trading at about 50, 30, 40 bucks. And this is what's been happening recently, all the way as high as 467. So if you bought at this $40 mark, by the way, it's been creeping up gradually over the last few months. However, if you bought at 40, you're sitting pretty, because even at this low point in the last day or two, it was sitting at 137, so you've tripled your money. But someone had to have bought in, God bless their soul, at $469. Someone's bought in at that price. And then look what happened. All the way down, and now we've done a bit of consolidating and we're back at $223. So from 480 to 220, they've got a 50% loss. I can make that 50% loss anywhere. And frankly, I just wouldn't take that risk. So as I said, it's not about being the first one there. It's about not being the last one. And hence why you have these sparking, this outcry on Reddit. So then we've got India would ban private cryptocurrencies under the proposed legislation. I'm really disappointed in this one here, and really the Indian Parliament will consider a government-introduced bill that would ban private cryptocurrencies in its upcoming budget session. It's not the first time they've banned cryptocurrencies. They did it in 2018, and it's only recently that they cleared the ban, and now they're looking at banning it again. We've had China banning cryptocurrencies before they realized, we have to get on this bandwagon, otherwise we'll be left behind. And I think that's the approach that India needs to take. So while the bill is anti-private cryptocurrencies, it will allow certain exceptions to promote the underlying technology of cryptocurrency and its uses. So anti-private cryptos, so Bitcoin is one of them, but it'll happily allow a central bank digital currency. Interesting. So looking at an economic perspective, I think this is detrimental to India as a developing country. I also think it's detrimental to them as an economy. I think it's detrimental to them as an innovator, to technology in general in the area. If they plan on being a first world country sooner rather than later, they're going to have to start being a world beater or a world leader in things like cryptocurrency and the crypto ecosystem, in space innovation and renewable energy innovation. And they're just not going to do that by outlawing things and shoving their head in the sand and going, the only thing that we're going to stand by is central bank digital currencies. So imagine you're being a crypto entrepreneur in India right now. Where do you go from here? It's just shocking. Moving on, We've got Elon Musk prompted Bitcoin price surge causes liquidation of 387 million in shorts. I don't know if you guys have seen this or heard about this. I don't know how you could not have, because the price of Bitcoin spiked to a 10-day high, woo, of $38,020 and sparked 387 million worth of short liquidations on major exchanges, all because Elon Musk put a description in his Twitter profile saying Bitcoin. On that note, Google searches for Bitcoin, a barometer of widespread interest, surged following Musk's cryptic endorsement of Bitcoin. It remains to be seen if increased interest translates into more buying and stronger price gains. I think it does. If you guys are following today's price, the price of Bitcoin is at about 35,000. There you go. Interesting. Moving on, Elon Musk, Bitcoin is on the verge of broad acceptance. So for those of you who listened to his interview on the social app Clubhouse, Musk said he should have bought the digital currency 8 years ago. I agree, Elon, I agree. I think all of us are kicking ourselves that we didn't buy back then, but hey, it's never too late. Well, it is. If all the institutions get in, then it's definitely too late. So get in now, ladies and gents. By the way, this is not investment advice. I am not your financial advisor. I should point that out. Now, he also goes to say, I do at this point think Bitcoin is a good thing. I'm late to the party, but I am a supporter of Bitcoin. Well done, Elon. Thanks for getting involved. So finally, we've got TikTok rivals $5.4 billion IPO draws big investor following. So this is awesome news. The initial IPO is set to be the world's largest in more than a year and will value the company at nearly $61 billion. Both companies have fed growing demand from younger Chinese people to watch and record short videos on their smartphones. And if you have a look at this graph here, I think this speaks volumes. So live streaming is set to become a major part of China's fast-growing e-commerce industry. But if you have a look at this graph, we've got 2020, live streaming is 1.23 trillion yuan. Live streaming 2025 is 6.4. So 1.2, 6.4, about 5 and a bit times the 5 and a bit X. So you're going to see the live streaming sector multiplied by 5 times according to this article here, according to 𝗪𝗫𝗁𝗂𝗁𝗫𝗁𝗂𝗁𝗁𝗁𝗁𝗁𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗂𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁𝗁 booming is going to continue to boom, especially in China and Southeast Asia, because Southeast Asia is a developing economy and they've got a young demographic. However, this is a report that is released by Google, Temasek and Bain & Company, and they say as consumers and SMEs come online, the 2025 number stands strong at over US 300 billion, as in the e-commerce industry will be 300 billion by the year 2025 in Southeast Asia, indicating growth despite a challenged environment. So despite coronavirus and everything that's going on and people not having jobs and jobs declining and people being shut inside, the e-commerce industry is set to expand from 100 billion to 300 billion, which is fantastic news. And on that note, stay tuned because next week will be our first valuation video, which we're super excited about. And we're going to be evaluating a crypto project that's set to disrupt the e-commerce industry, the gaming industry, and especially the video streaming industry. And where are they set to disrupt it? Southeast Asia. So stay tuned. If you want to know how we get to a market valuation for this project, that is 66 times the current market cap of the project, hit the like and subscribe button, turn on your notifications, and you'll be the first to know next week. That's all we've got time for today, folks. If you enjoyed today's video, hit the like and subscribe. Otherwise, we'll see you next week for the evaluation vid. Peace.